Welcome back to AlgoBot, the channel where we take automated trading strategies for MetaTrader 5 and break them down in clear, educational language. I'm your host here at AlgoBot, and in today's video, we're exploring an expert advisor called Point Figure Column Breakout. This strategy takes one of the oldest charting methods ever used by traders, point and figure, and rebuilds it as a modern, volatility-aware trading engine. Over the next few minutes, you'll learn how it filters out market noise, how it recognizes two classic breakout signals, and how it manages risk using the average true range. So settle in, and let's explore how this approach works. So what exactly does this expert advisor do? At its heart, Point Figure Column Breakout is a faithful point and figure charting engine, driven from ordinary single timeframe price bars. Point and figure is a remarkable idea from the early days of technical analysis. Instead of plotting one bar for every unit of time, it throws time away completely and focuses only on meaningful price movement. Price is divided into fixed-size blocks called boxes. As long as price keeps pushing in one direction, the chart simply extends the current column, a column of X's for up moves and a column of O's for down moves. A brand new column only begins when price reverses by a set number of boxes. This quietly distills messy, noisy price action into clean, alternating up and down columns. In this expert advisor, the box size is not fixed by hand. Instead, it adapts to the market. The box size equals the average true range multiplied by a factor you can set, which defaults to 0.5. That means the grid automatically scales to the instrument you're trading and to the current volatility conditions. On a calm day, the boxes shrink. When the market becomes more active, they widen. The strategy trades the two textbook point and figure signals, the double top buy and the double bottom sell, which we'll unpack shortly. To keep entries sensible, it adds a 50-period exponential moving average as a trend filter, so it only looks for long trades when price is above that average, and short trades when price is below it. Risk on every trade is measured in units of average true range. This EA can run on any symbol and any time frame you choose at test time, because every calculation is built from the primary time frame. It's best suited to traders who are curious about classic charting theory, who appreciate noise filtering, and who want to study how a rules-based breakout system behaves. Remember, this is educational information only and not financial advice. Let's walk through the mechanics step by step. On every completed bar, the expert advisor updates its point and figure grid using that bar's high and low. First, it calculates the average true range over the chosen lookback, which defaults to 14 bars, and multiplies it by the box factor to get the current box size. It also computes the 50-period exponential moving average for the trend filter. Now the grid logic. Suppose the current column is an up column. If the bar's high pushes at least one full box above the column's highest point, the column simply extends upward by however many boxes it has gained. Here comes the first signal. If that rising column climbs one box above the top of the previous up column, the strategy detects a double top buy. Rising highs on the point and figure grid suggest buyers are in control. If, instead, price falls back by the reversal amount, which is the number of reversal boxes, defaulting to 3, multiplied by the box size, the up column ends and a fresh down column begins. The old column's top is stored as the reference for future double top signals. Then, if this new down column drops below the bottom of the previous down column, the strategy detects a double bottom sell. Falling lows suggest sellers have taken over. The logic is perfectly symmetric between the two sides. Before acting on any signal, the expert advisor applies its filters. It only holds one position per magic number at a time, so it won't stack trades. It then checks the trend filter. A double top buy is only taken when the completed bar closes above the moving average, and a double bottom sell is only taken when it closes below the moving average. This keeps entries aligned with the prevailing drift rather than fighting it. When a trade is approved, risk management is handled entirely through the average true range. For a long, the stop loss is placed below the entry at a distance of 1.5 ATRs, and the take profit is placed above at 3 ATRs. For a short, those distances are mirrored, the stop above and the target below. Because the target is twice the distance of the stop, every trade carries a reward-to-risk ratio of 2 to 1. There's no trailing logic here. Each position simply runs to its stop or its target. It's a clean, transparent framework, and of course, losses are a normal part of trading. Let's look at the actual MetaQuotes language code that runs inside MetaTrader 5. At the top, we have the input parameters. BoxAtrFactor, defaulting to 0.5, controls how fine the grid is. ReversalBoxes, defaulting to 3, sets how large a counter move must be before a new column starts. ATR-period, defaulting to 14, drives both the box size and the stop distances. TrendEmaPeriod, defaulting to 50, is our trend filter. And the ATR stop and take profit multipliers at 1.5 and 3 set the stop and target in ATR units. Now the first signal block. You can see the condition that checks whether the current column extreme has climbed above the previous up column's top. When that is true, and no signal has yet been generated in this column, the buy flag is set. Once the trend filter agrees, the code reads the ask price, places the stop 1.5 ATRs below it, sets the take profit 3 ATRs above, and calls trade.buy with the comment point and figure double top. The second block is its mirror image. The condition checks whether the current column extreme has dropped below the previous down column's bottom. When that is true, the sell flag is set. The code then reads the bid price, places the stop 1.5 ATRs above, sets the target 3 ATRs below, and calls trade.sell with the comment point and figure double bottom. Notice how both sides share the same ATR-based risk structure, just flipped in direction. That symmetry is the heart of this strategy. Now let's watch the strategy come to life on an illustrative chart. On screen, you'll see a series of candles, a blue line weaving through them that represents the 50-period EMA trend filter and 2 dashed horizontal reference lines. The upper dashed line, sitting at 1.0885, marks the top of an earlier up column, and this is our double top reference. The lower dashed line, at 1.0875, marks the bottom of an earlier down column, our double bottom reference. Keep both of these in mind as we go. We begin on the left. The first few candles push higher, and price rallies right up to that upper reference line at 1.0885 before stalling. On the point and figure grid, this is our first up column reaching a peak. Then the market pulls back. Those next couple of candles represent a reversal, enough of a counter move to end the up column and start a fresh down column. Notice that price stays above the blue trend filter for the most part, so the prevailing drift is still upward. Now the interesting part. Price finds a base and starts climbing again, building a brand new up column. Watch the sixth candle in the sequence. It pushes decisively above the upper reference line at 1.0885, one box higher than the top of that earlier column. This is the double top buy signal. Because the candle also closes above the blue moving average, the trend filter agrees, and the buy entry marker appears. The expert advisor goes long, placing its stop below the entry at 1.5 ATRs and its take profit above at 3 ATRs. From there, the move follows through nicely. The next candles print higher highs, the up column extends, and price climbs steadily toward the take profit target above. A few candles later, price reaches that target and the take profit marker is hit. That completes the long trade. A clean example of the strategy buying strength once a prior level has been broken and the trend agrees. But the story doesn't end there. Watch what happens next. Price stalls at the top and begins to roll over. A tall down candle carries price back down, and the blue trend filter, which had been below price, now flattens and rises above it. The drift has flipped from up to down. Price falls to form a fresh down column, bottoming right around the lower reference line at 1.0875. A brief bounce follows, creating a small up column, but it fails to recover. Then comes the mirror signal. Price rolls over again and drops one box below the lower reference line at 1.0875, below the bottom of that previous down column. This is the double bottom sell signal. Because the candle closes below the blue moving average, the trend filter confirms the downside, and the sell entry marker appears. The expert advisor goes short, placing its stop above the entry at 1.5 ATRs and its target below at 3 ATRs. From there, sellers stay in control. The final candles push to fresh lows, the down column extends, and price slides down to the take profit target below, where the second take profit marker is hit. That completes the short trade. Notice the symmetry across the whole sequence. The long trade needed rising highs above a prior up column with an upward trend filter. The short trade needed falling lows below a prior down column with a downward trend filter. In both cases, the reward to risk was set to 2-to-1, and the box and reversal filter meant each breakout came only after a level had genuinely been tested. Of course, not every signal plays out this cleanly. This is an idealized illustration, and in real markets losses do occur. And that brings us to the end of our deep dive into the point figure column breakout expert advisor. Today we explored how point and figure charting filters out market noise, how the strategy recognizes the classic double top buy and double bottom sell signals, how the ATR-based box size keeps the grid adaptive, and how the EMA trend filter and ATR stops shape each trade. I hope this gave you a clearer understanding of how a rules-based breakout system can be built and studied. If you found this helpful, please give the video a like, leave a comment with any strategy you'd like us to cover next, and subscribe so you don't miss future MT5 strategy breakdowns. You can find more educational content and tools over at www.algobot.live. Remember, everything here is for educational purposes only and is not financial advice. Past performance does not guarantee future results. Trade responsibly.